already start to draw out these structure narratives, and you can see exactly where the structure's taken us to. It's taken us to directly to, and without stopping, without passing go, and without collecting $200, it's taken us right to our target structure, right there. Thank you very much. It's called a measured move. It's called a measured move, and we came right back into that little puff of value right there as well, that little puff of value which we always enjoy getting. So I've liked it. It's been a trade that we talked about, as I said, this morning. We discussed it, and there's nothing better than it, I don't think. You see, it kind of changed its narrative, because take a look at what happened in here. Look. You see what started to happen in here at 1309 and then 1314? STRS traders expect rates to fall. Well, that's interesting, isn't it? So the STRS traders are expecting rates to start falling at 1309 on the trade log. Well, what's going to happen to bonds if they expect rates to fall? 1309. Well, this was 1309 in here, wasn't it? So it was exactly the same as what we got here. Remember, we had exactly the same narrative here at 10 o'clock, 10:30 this morning. Remember? Exactly the same story. That was the storyline we gave you this morning, in fact, about those rates falling. If you don't remember, here it is here. Look, notes, market makers are bidding cycle lows. STRS traders are expecting rates to fall. We're going to get a strong drive lower in bonds, and then we're going to rip that into a buy trade, 10:30 this morning, 10:30. So that's exactly the same trade that we had at 10:30. There's the trade at 10:30. They get the liquidity we need for the morning session. And then this is exactly the same storyline at exactly that same price point. Exactly the same. It's perfect, guys. It's absolutely perfect. That's why we go back over the work we've done to make sure we're reminding ourselves of these narratives building. And it wasn't just this, was it? It wasn't just this story, because you'll see, for example, here, if we look at what happened just in there as well, you'll notice that the knob program, if it stops giving me these quick fancy things happening, the knob program had commercial bidding coming in, 1304. So obviously when we get that, and then we get this STRS trader coming in as well, we're thinking grail trade. This is going to be a grail trade buy trade. And needless to say, of course, that grail trade buy trade at 1304 runs the price down into the 6s and 7s, and we get this trade that's just made $1,000 back on the sweep. It's almost impossible not to really start feeling that time in sales as a real money time in sales. A lot of people like time in sales in the olden days. It used to be one of the basic go-to products in the olden days of trading. When the floor traders came upstairs, time in sales became like the godsend. Well, this is an up-to-date version of time in sales. It tells us like it's diving into the time in sales, and it's looking at who the bidders are and what they might do. Just because time in sales finds a buy order doesn't mean you buy it, but it tells me I should be looking at that buyer and saying, why are they buying this? What are they telling me about that time in sales at that point? This is what we're talking about here. This is a modern day time in sales. And that's the breakthrough that you get when you're using these tools. I'm able to see that that time in sales entry there was the same as the time in sales entry here. And from both trades, we've been able to make some crazy good money. Crazy good money. Well done, anybody that's joined in. And all you had to do was follow the time in sales. Crazy, crazy, crazy. The belly of the curve was pretty much on top of that trade as well. If anybody was trading the belly, there was a strong bottom line divergence from the belly. And, we know that for a lot of people, they like watching the belly trade. If you look at the belly as a slow moving average, you'll see the belly divergence for the low price. Is that pretty obvious? Is that bottom edge obvious for a belly divergence? Well, of course it is. It's crazy obvious, isn't it? Crazy obvious. That's why we didn't get a retest of the low price here, because obviously you might have been looking at that saying, oh, I'm going to probably trade 125 evens. Not if the belly's doing that. You're not going to get anywhere near 125 evens if the belly does that. So we've got to make sure we're ready to get busy. Got to make sure we're ready to get really busy with this, guys. We're not going to get that bottom edge. So we're ready to get busy with it. We take the trade on, boom, we've hit our target price. And that was also part of our conversation this morning about the curve, wasn't it? The daily curve. Does anybody remember the conversation we had this morning about bonds needing to be a lot higher? Remember that conversation as well? No shit, Sherlock. We were right, Theo. Imagine us being right about something for a change. That's a bonus, isn't it? So we can obviously, we talked about this morning when this was selling early on, and I says there's a concern about this sell. And my concern about that sell was that the bond price should be trading 128s. So with the bond price potentially needing to trade 128s just to get value for this curve, we were right. It's gone back bid again, hasn't it? So I think we can claim that one. We can claim that one for sure, Theo. I think we're happy enough to go ahead and say that was a winner for us.